you. And joining me now to continue to take a look at the big movers, some of which are winners. Mastercard is trading to the upside. Sam Vadas is with me here on the desk taking a look at Mastercard. Good morning, Sam.
Yeah, good morning to you, Nicole. And what a day to be talking about some of these companies. We've just got so much to get through. And what these payments companies have certainly been confirming to us, we've got more evidence of that from Mastercard as well, is that the consumer remains resilient. And certainly we saw the banks setting the tone as far as that trend is concerned. It looks like Visa and Mastercard is in line with that as far as what we're seeing with regards to the consumer. Let me run you through the numbers as far as what we got from the company. 415 on adjusted EPS, beating the street's expectations of 402 there on revenues of $8.13 billion versus estimates of $7.95 billion. So as far as the payment network revenue is concerned, also some of the transaction volumes as well, which is of course what investors pay attention to because these companies are very much in the business of facilitating those transactions and payments. Network revenue rising 13%, fueled by what was a 9% increase in those transaction values and also 15% increase on cross-border volume and a 10% jump in transactions. So as I mentioned, consumer spending holding up, strong household confidence despite the fact that we've seen some of these trade policies. Also, what seems to be helping as far as sentiment towards this company today is the fact that they did also raise the guidance. It's interesting what the analysts have been already saying about this versus Visa, what we got earlier in the week from that company. I have seen a quote out from Mizuho analyst Dan Dolev, who looks at this space very closely, is that Mastercard's move here off the back of raising its guidance amid what he highlights is the macro uncertainty reinforces our view that Visa's guide is overly conservative. And so it's been very interesting to see the reaction in the stock this morning, up 1%. We didn't see as big moves when we saw Visa reporting earlier in the week, but very much echoing Visa, as I mentioned, when it comes to the consumer remaining resilient. As far as what else some of the analysts have been talking about, obviously in the lead up to this, there's been a lot of questions about the disruptors to legacy payments coming from the likes of stable coins, given obviously a more sort of crypto-friendly environment, mainstream adoption and institutional investor appetite also. But some of the analysts believe that some of this is a bit overdone as far as the threat that this poses to these payment companies. But also when you talk about the valuation, that's been really key here, Nicole, as well. A similar story to Visa as well. Elevated PE ratio over 30. So some are saying that perhaps that does raise some of the execution risks moving forward.
I mean, great news here for Mastercard, which is up 1.4%. They're seeing the spending. They have the revenue gains. The folks are spending on services and such. And yesterday, when we heard from the Fed, I mean, he was noting that the economy was still quite stable and that and folks overall wage growth was still prevalent. I mean, it continued to moderate, but still outpaced inflation. So people have jobs and they're spending. I don't know if they're worried. I mean, the sentiment number was a little better recently, that people were a little less worried about inflation. So maybe, you know, they have some robust spending. They don't care, right?
Well, they see the health of the consumer, and I think it's been really interesting this earnings season to get a test of the temperature when it comes to how the consumer is feeling right now, because while the banks and the payment companies have certainly seemed to think that things are holding up okay. I mean, if you ask the Chipotles and the airlines of the world, Nicole, it does seem like that they have a few concerns about, you know, their spending habits right now.
All right, let's talk Carvana.
Yes.
I mean, what a move. This big gap up, stock at new highs. Carvana just killing it, up 215% in 1 year. Yeah,
it's been such an incredible run this year. Let me run you through the numbers as far as what we got from that earnings report, because it was a beat across the board. EPS of 128 versus the street's expectations of 110 there. The revenue raking in 4.84 billion versus 4.58 billion there as well. So a clean beat there. The company is saying that their results position them well for a strong Q3 and Q4, and they do expect the following as long as the environment remains stable. So perhaps a little bit of caution there, but no doubt it is helping investor sentiment out today as far as what they had to say with regards to how they feel about this company, because it was trading a bit flat before the close yesterday. But as you mentioned, Nicole, it's been on quite a tear this year. I mean, that chart just paints the picture as to that upward slope there. The concern certainly has been, this is an interesting sort of angle to this story, that the auto tariffs could impact Carvana's bottom line here, because this was the first quarter, Q2, where we have certainly seen a bit of a material impact on autos. We've heard from some of the companies like GM, for instance, but it doesn't look like that's actually impacted the company. Consumers are still buying. And actually, the story for this company is on the flip side. It does very much look like that analysts expect that this will ultimately boost used car sales, because new vehicles will be impacted more by some of those price hikes. And you can see it in the numbers as far as the units sold. So it's interesting because Carvana still lags behind CarMax, but it is very much closing the gap. And I think it was the Oppenheimer analysts last week who looked pretty bullish ahead of this earnings report, upgrading this and giving it a price target of $450. So we're at $403 and change right now.
I mean, the fact that the cars sold is up 41% year over year, it just shows that people love Carvana. Maybe they love eBay too, because this stock is up 15% today. It is the best performer in the S&P 500 today, Sam.
Yeah, absolutely surging on what was also an earnings beat here, and the commentary was really encouraging as well. So I'll run you through a bit of that. But we did also see some strong guidance, which is reassuring too. So there was a lot to like in this report, seemingly, and certainly the street is cheering that today. 137 on adjusted EPS versus 130 on the street's minds there heading into this. A revenue of $2.73 billion, beating $2.66 billion estimate. So as far as Q3, they do see adjusted EPS of between 129 and 134 when the consensus was 130, and also expecting revenues to come in between 2.69 to 2.74. Which is higher than the consensus. Also GMV, which is the dollar value of the items sold, they did report that actually rising 6% to $19.5 billion, and they expect to see continued strength there of $19.2 billion to $19.6 in the subsequent quarter. Now, as I mentioned, the commentary looking fairly encouraging, talking about how they are pretty well positioned here right now to really navigate the uncertainties caused by the Trump tariffs. Obviously, this company has really been caught up in a lot of the conversations around what those trade policies could mean, particularly for some of the discretionary online purchases, when you're talking about also with regards to the de minimis exemption, which has now been scrapped, remembering that that was the duty-free that was given to parcels and packages under $800. So there has been a lot of commentary around the fact that when that was eliminated in China, they did see a deceleration in those direct shipments, but they have managed to diversify as far as finding products available to buyers in other countries like the UK and also Germany. What's interesting, I think, also from the commentary, Nicole, is that they did talk about forward deployment of about 75% of inventory from China into the US before the changes to the de minimis policies, which was in May. So they've actually pulled forward a lot of their stuff. So it's going to be very interesting to see if they can keep up this trend, certainly moving forward. But, you know, their competitors are the likes of Amazon, Shein and Temu. But also when you look at the stock, as far as the valuation, analysts have been pointing out it's cheap, 17 times earnings versus 26 times for the industry.
All right, Sam, thank you for that. I mean, Qualcomm, in an area, in a sea of green, there is a sense of frustration here. Yeah. Over 1 year, it's down 15%. It hasn't managed to really come back. The low was 120, it's at 152, but the high was 182. It's nowhere near there. And when I spoke to, I think it was Olivier Blanchard, he used to talk about how Qualcomm was really going to be a part of AI and how great it was going to be. And it leaves people sort of, and I see Rosenblatt has a buy and a 225 price target. Maybe that's just a little slow.
Yeah, look, JP Morgan, I think, has a price target of $200 as well. I mean, so that implies potential upside here. It was a beat as far as Wall Street expectations are concerned with this earnings report. As you can see here, $277 on adjusted EPS. Revenues were up $10.37 billion. So that can be just shy there, but it does look like investors had higher hopes, particularly after the rally, as you pointed out, Nicole, since April. I mean, as far as the commentary is concerned, it does certainly suggest that their leadership in AI processing and what they do around high performance and low power computing positions them to become the industry platform for choice, particularly as we see AI very much gaining momentum here. The company obviously is in the business of some of the mobile processors and the 5G wireless chipsets. But we do know that there is an expectation that they could potentially lose Apple as a customer for the modem business, but they've been talking up very much as far as this earnings report is concerned, some of their other customers diversifying their business as far as making chips for other devices, also with regards to Meta, the virtual reality headsets, and the Ray-Ban smart glasses as well. So yes, look, shares under pressure this morning. It does look like maybe investors were wanting a bit more from this company, but it was interesting heading into this. We also got Bernstein analysts reaffirming outperform rating, looking at 185 price target as well. But it does look like, you know, they are a bit sort of out of favor amid the sort of general distaste of smartphones. There are tariff concerns for this company as well. But look, it's been underperforming the semiconductor ETF as well. When you take a look at, you know, year to date, I think it's only up about 5% versus the broader industry too.
Okay.
So it's underperformed.
A lot of great names there, Sam. We should look at Mastercard, Carvana, Qualcomm, and eBay. Thank you.
Thank you.
Sam Vadas.